Welcome to the What Mortgage Show. I'm Stephen Little. With lenders slashing mortgage rates, many borrowers are locking into fixed deals to reduce their payments and guard against interest rate rises. We have David Hollingworth from mortgage broker London and Country with us, who's going to talk about what you should consider when remortgaging. David, thank you very much for joining us.
Pleasure.
It used to be the case that when you took out a mortgage that you would stay with the same lender until you had paid it off. However, nowadays lots of people are choosing to swap lenders. So why so many people remortgaging?
Well, there's lots of different reasons actually. Obviously the mortgage will be your single biggest outgoing in most cases. So it really can pay to keep it under close review and switch around. So it could just be saving money that is a good idea for some borrowers. But others will look at remortgaging for different reasons. So they might be looking for home improvements, doing that loft conversion, putting on the extension, and therefore need to borrow a little bit more and pull out some of the equity in their property. So that might trigger them to remortgage and switch to a new deal. Other people might be consolidating other debts, or they might just be looking to raise capital for some other reason, even a new car, something like that, just releasing a little bit of equity. So there's all sorts of different reasons, but some of the primary ones are really just saving cash.
Why is it a good time to remortgage?
Well, mortgage rates are exceptionally low. It's really, really competitive out there in the marketplace. So mortgage lenders are really trying to attract borrowers in with enticing rates. Many of the deals on offer are now at record lows. So if you're on a standard variable rate, which is easy to just drop onto at the end of a deal, you could actually be saving yourself thousands a year if you actually take the time to review your product. So looking to shop around, see which is the best deal for you, potentially lock in as well, so you're not open to higher interest rates in the future. All of these things make sense, and there's great rates out there.
How does the remortgage work?
Well, basically you're just taking the current mortgage, paying that off by borrowing it from another lender. So your existing lender may offer you something to switch to at the end of your deal. So have a look at that, but then compare it with what other lenders in the market are offering. It's really important to do that because actually the chances of your current lender offering you the very best deal are potentially quite slim. So shop around, see what you can get, and then basically it's a fairly simple process. There is a little bit of legal work involved, but many lenders will cover that as well for you. So it's a relatively straightforward process.
So what sort of remortgage should a borrower choose?
Well, you can look at the whole range of options. So, if it's something that you wanted to tie the deal in for the longer term, so perhaps you are borrowing a bit more, but you want to know where you stand with that, so you've got some budgeting certainty, then a fixed rate could suit you. Other people might like the idea of having a bit more flexibility, and variable rates may carry fewer penalties. So that may be an option, but of course you're open to rising interest rates. So you'll be able to choose that within the whole process.
And what about the fees and charges? Are the best rates often the lowest deals on the market?
That's a really, really good question, because that's one of the key issues when you're looking at a deal. Don't just be drawn to the headline rate. It's really easy to be done to do that, and there's some great rates out there. But they can come with big arrangement fees. Not only that, you will need to have a valuation conducted. Some deals may require you to pay that. Others may offer it free as an incentive. And you'll also need to get some legal work done. It's pretty basic, but again can come at a cost. However, lenders are really aware of that. They're trying to pull those barriers down. So for some, going for a deal with a slightly higher interest rate but lower fees, so potentially no arrangement fee, free valuation, free legal work, that's an option too. So it's just about weighing that up and looking for the best overall value rather than just going straight for the lowest rate.
Is it a good idea to remortgage early?
Well, those who are worried perhaps about where interest rates may head, and of course we've had a recent split in the decision about whether base rate could rise, you can start the process rather sooner than you might have thought, because some lenders will allow you to lock into a rate up to 6 months ahead. Others may be shorter than that, so you do just have to check. But if you're tied in with a deal right now, you can probably still get the ball rolling, so you get a nice smooth switch across to your new deal when your current one comes to a close.
David, thank you very much for joining us.
Thanks.
And thank you for watching.